Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Please don't forget to like and subscribe. Click the bell so you get a notification of when we're releasing a new video. I'm sitting again today with Michael Porter. Morning, Michael.
Morning, Robin. How are you?
I'm all right. Thank you, Michael. Michael, you've kind of been warning for some time that if the Fed didn't act, your concern was that actual underlying economic engine was going down a bit or slowing down a bit. We're starting to see some real wobbles in Asia. Is this the start of what you threatened?
Yeah, Robin. I think it's interesting. I think there's sort of two catalysts basically for what's going on at the moment. And markets sold off pretty heavily on Friday. Some sectors of the market sold off pretty heavily on Friday in the US. Japan is down 11% this morning.
Wow!
As we record this, so I think there's two things. I think in Japan, basically what's happened is that the Bank of Japan raised interest rates last week, the week before. Now that economy is very sensitive. So what's happened since they raised rates is that the yen has strengthened.
Yes.
That market is extremely sensitive to the yen because it's such a big exporting market. So. Banks are getting hammered in Japan, and exporting companies are getting hammered because of the strong yen and then currency pressure. And so that's sort of, I suppose, the one area of contagion. And the second thing is that we've been saying, for quite a long time that we think the US economy is slowing down. And you can see it in some of the company results, especially the consumer-facing things like McDonald's or, they're huge companies, but at the margin when your growth is, zero or your sales are down a little bit, it just shows that people are under pressure, it's exactly the same here. I mean, people are not spending on burgers. Well, you might be buying one less burger a week, but that adds up.
Yes.
Across a whole ecosystem, So on Friday, in the US, jobs numbers came out, which comes out on the first Friday every month. And, that was a little bit weaker. So the unemployment rate is now ticked up to 4.3% in America. It's still low, but it was probably 3.6, 3.7 at the lowest point. And again, I think it's just the Federal Reserve has sort of hinted that they'll be cutting in September. Now I see some of the forecasts changing already that they're going to cut by 50 basis points in September as opposed to 25. Wow. Maybe a slightly sort of jump-started. But I think we have been saying for a while that they risk, one risk was that they didn't cut at all, which we think would have been a mistake, but that they risked waiting too long and things slow down. Do you think that it takes sort of 6 to 9 months for interest rates to become effective? Also on the downside, it takes 6 to 9 months for rate cuts to become effective because if you get a rate cut, you don't just go and immediately spend that money.
You have to recover.
Yeah, you have to recover. You have to pay off a little bit of debt or whatever the case is. And so, and you have to get some confidence. It's not, you're obviously feeling the pressure, so you're not just going to go and throw caution to the wind kind of thing, So listen, some of the more highly valued parts of the market are coming off. We're also in US reporting season, which, so while quite a lot of companies have beaten estimates on earnings, revenues have actually been a bit weaker. You can beat earnings per share numbers on some accounting conventions.
What you wanted to say.
Yeah, exactly. Okay. But revenue is revenue. If your revenues are a bit weaker, then it basically shows that things are slowing down. So how does that really impact us down here? Listen, the US is obviously leads the charge on these kind of things, and we will be affected. But funny enough, Hong Kong is actually holding up very well. The tech sector there isn't coming under pressure at all at the moment. So that wouldn't really impact us person process kind of thing. And some of our mining companies, obviously the oil price fell quite sharply on Friday, but the gold price was rallied. So commodity prices are a bit of a mixed bag, but I suppose generally a little bit weaker. But I have to say, we're not overvalued, Robin. And I think this is where we've been saying for quite a long time is that the US is a market that's valued for perfection. We are valued for
disaster.
But the opposite of perfection is it's not imperfection. But, and so yes, we're going to feel a little bit of a heat. We're part of a global system, and we're going to feel some of the pressure from this. But we're not coming from a situation where we price for perfection. And actually, even if there is a global recession wouldn't be helpful to anybody. Let's say we don't really want that.
No.
but we still have the opportunity to paddle our own canoe and to grow with no load shedding, transit improving, and off a low base. So infrastructure investment here that we need to do that we haven't done for years and years. So I think we could be quite counter-cyclical. Not to say that the market won't be a bit volatile, but I'm not as concerned that we massively vulnerable to a big sell-off because we're not priced for that.
Yes, yeah.
But we will ebb and flow. I mean, sentiment is sentiment.
Yes, yeah. Michael, if the Fed does a 50 basis points in September, where does that leave the SETCHO on our side? I mean, are we looking at a more aggressive cut on our side, or?
Yeah, Robin, that's interesting. I mean, the SETCHO is always so conservative, but I think that if they really took a long, hard look at themselves, I think they would also be concerned that our economy is a lot weaker than maybe it makes out to be, and they can. I'm not sure whether they would cut 50 straight away because I think what's always what you don't really know is just how currencies are going to play out. So the dollar's been a bit stronger. US bonds have rallied sharply over the weekend. Yes. And the US long bond is at 3.75% now. Right, yeah. It hasn't been there for probably 18 months or something like that. So I think we will definitely get it. I think this almost cements a cut for us as well in September, which is high time. Whether they would do 50, I think they're too conservative for that. But we have another meeting in November. So September, November, you get 2 cuts kind of well on your way. Yes. I think they would probably prefer that route than doing something aggressive. Unless something dramatic changes in the next sort of month, that then says, well, there's a sharp recession coming. But even I don't know if there's a sharp recession coming, but I do think that things have been slowing down for a while in the US. So Goldman Sachs have raised their risk of a recession to 25%. So it's not 95%, but I mean there's definitely a period of slower growth coming through. And then we can increasingly focus on the US elections in the next sort of 2 months.
Yeah, that's going to be an interesting one. Well, I think certainly the second half of the year is going to prove to be very interesting. A lot of news flow to come. Stay tuned and we will keep you up to date as events happen. Michael, thank you for joining us.
Pleasure.
Don't forget to like and subscribe and we'll catch you next time. Bye-bye.